Welcome to Accounting Made Simple, where numbers make sense and confidence begins. I'm Mr. Samson, and today we're diving back into our accounting topics. Whether you're in grade 10, 11, or 12, you are in the right place. Let's break it down step by step for you.
Good day. So today we are looking at the September 2025 paper 1 for Limpopo province. Key topics are the cash flow statement and financial indicators, all worth 40 marks. Let us enter the concepts here, and the answers are given as statement of comprehensive income, current assets, non-current assets, statement of financial position, networking. Choose the correct term below. To complete each of the following statements, write only the term next to the question number from 2.11 up to 2.14 in the answer book. So the best way to approach this is to eliminate what you know and what you understand until you have corrected all the marks. Consumable stores on hand is a dash. The correct answer is current assets. And then let us eliminate this one out. And then 2.1.2, a fixed deposit that will mature in 2 years is a dash. That will be our non-current asset, NCA, and that one is out. So the difference between current assets and current liabilities is called dash. That will be net working capital. So this one is also out, net working capital. Alright, on the next one, the statement reflecting the profit or loss of the company is called a dash, and that will be statement of comprehensive income. Let us quickly put our answers in the answer book. So question 1, it is current assets. Question 2 from our revision, it is non-current assets. Question 3, net working capital. And question 3, statement of comprehensive income. Alright, so all in all here we are working for 4 marks. Now we should move on to the next. If you look at the question there from 2.1, now you must deal with 2.2, Check All Limited. The information of Check All Limited for the year ended 28 February is provided, so we must check the financial year there. It is 28 February 2025. Alright, calculate the following for the year ended 28 February 2025. Net profit before tax. We must also calculate inventory before we can handle 2 points. So on the given information item A, you'll see that you have depreciation, interest, net profit before tax, and income tax of 30%. Okay, this will allow us to handle the first part, net profit before tax. So remember, you have net profit after tax and income tax. To understand the relationship between those two, one can create a logic table. Profit before tax represent 100%. Then the income tax on its own, it is 30%. Therefore, after tax, it is 70. Right? Now, if you go back to the income statement, we have 32,200,000. You place your 32 million here, 200,000, and this will be a dash. Then we are going to apply what we want over what we have, cross multiply by the amount. So we want to get before, that will be 100, over what we have, that will be 70, cross multiply by 32,200,000. And our final answer is going to be 46 million rand. Alright, that is question 2.21, where the examiner is asking us to calculate net profit before tax. And these are the calculations. You would walk away with 2 marks. Alright, we were asked as well to calculate the inventory figure. So we should go and search on the information that we have. Item A is income statement. Item B It is our balance sheet. We know that our inventories from the previous year is 679,000, and there is no entry in the current financial year. So we are going to look for more information that can help us. Right. When you get to this point, we have item C with current ratio and asset test ratio. Those two ratios, they are very important in the sense that they share a common formula. So formula for current assets, for current ratio, it is current assets as to current liabilities. And then for asset test, it is current assets minus inventory, all as to current liabilities. So the difference between this and this represent our inventory. The difference between 1,15 and 0,75, it represent inventory. Now, do we have the figures that we can apply for this ratio to work? So one, we must check if we have current assets. Current assets figures, here they are missing, okay? But current liabilities, we do have them. And that is the most important thing. So the ratios that we are looking at right now, they represent 2025, and I have 964,000 here, right? So I can use the long format that will allow us to understand the basis of what we are calculating. If current assets as to current liabilities were applied, it means here we had X amount we don't know, but the figure for current liabilities we know, and that will be 964,000. This was applied, and the answer that we got from this application is 1,15 s to 1. So here is 1,15 s to 1. If you cross multiply, you will get the value for x is 964,000 multiplied by 1,15. If you further calculate, you will walk away with 1,108,600. That is the value for current assets. If you apply the same formula and say we know that we have said current assets minus inventory as to current liabilities to get the asset test, that will be X amount again as to 964,000. When these two figures were applied, the final answer that we got is 0,75 s to 1. So to find X, we cross multiply. So X is equals to 964,000 multiplied by 0,75. Therefore, X will give us 723,000. And this is the amount that was used in our asset test. So this ratio here is your current ratio, and the second one, it is our asset test ratio. Now we know that the difference between this and this amount represent inventory. So therefore 1,108,600 minus 723,000 should give us the amount for inventory, and that amount is going to be 385,600. The shortest method that could have been applied in this circumstance is to look at the two ratios given, and you take 1,15 subtract 0,75, and this will give you right away 0.4. The 0.4 that we have represent inventory. You take 0.4 multiplied by 964,000, and this will give you again the same answer as the one above. So since this one is more of a shortcut, you will have to choose between which method, between the two methods available, which one will resonate to you very easily. I prefer the first one because it shows each and every step that must be followed. and you can apply this in any other scenarios that the examiner can give. Alright, so that one is sorted, and then we're now moving on to the next question. And if you look at the next question, we are now handling questions on the cash flow statement. So complete the following for the cash flow statement on 28th February 2025. We have note number 1, which shows the reconciliation between profit before tax and cash generated from operations. Right. Let us check our answer book as well. If we inspect the answer book, most of the entries are already there. This is our item here. So according to format here, you need net profit before tax. And if you could recall, we calculated net profit before tax not so long on the same company. So you are going to post your wrong answer. We calculated it to be 46 million rand. So that is our answer that we are going to post to this question. No calculations again. You take 46 million and place it there. Alright, adjust for, and then we are given these two items. Depreciation, we're going to add back. Interest, we are going to add back. If you add these two items, you'll get 46,408,400. So we have simply applied these two entries that we are adding. These are non-cash items that must be added back to our net profit. They're called non-cash items. Alright, and then our next step, we have changes in working capital. On changes in working capital, you could see that debtors were applied, creditors were applied, which means here you are left with changes in inventory. Alright, on your changes in inventory, you need inventory at the beginning of the year, and that will be 679,000 minus CD, and now the CD was not given if you look here, but we can recall that somewhere on the questions above the examiner asked us to prepare or to calculate rather the value of inventory, and our wrong answer is 385,000. We are going to apply that answer so that we can keep on earning method marks if it happens that our answers are wrong. So it is minus 385,600. The difference between the two is 293,400. And I'm using the word difference, the difference between the two balances. That does not address the issue of whether this is cash inflow or a cash outflow. To understand whether you have cash inflow or cash outflow, you must then apply logic. At the beginning of the year, we had trading stock or inventory worth 679,000. These have decreased to 385,600, and the only logic behind this is that we were actually selling trading stock. So if we were selling trading stock, it simply means we were receiving money. So this one becomes cash inflow. So we're going to leave that entry as a positive entry. Alright, reconciliation of net profit before tax and cash generated from operations is done, and it was very friendly in the sense that only 3 items were supposed to be added here, the rest was already filled in. Now your next step, you had cash generated from operations as the line item already given, but the key heading that we are having here is operating activities. So we know we must bring in interest paid, we must also bring in dividends paid, we must also look into tax paid. Those are the items which are appearing under operating activities, and this area here is shaded. It's not clear, but I can see that it is shaded. Alright, so if you get a question like this one where the answer book is completely blank, you need to find the line items first. If the line items are correct, then you can work your way out. So we know it's interest paid, dividends paid, and tax paid. The easiest way to approach this is to apply the formula. So we know our formula for interest paid, it is balance at the beginning plus current minus bank is equals to CD. And remember, this formula assumes that interest payable is a liability, and if you have interest receivable, that will be your asset. So if you look at this one, you have item B. On item B, we want to check if we have anything on interest, and there is our interest payable. It is given the name accrued expenses, and then in brackets interest on loan. So accrued expenses represent a liability, and in this case it is our interest on loan. So balance at the beginning is 9,300. You take 9,300, place it there, plus current. What is the interest expense amount for the current year? Interest expense amount for the current year is given right here in the income statement. So the moment I use the word current in a formula, I'm referring to the income statement. The BD and the CD, those are the figures that you get in the balance sheet. So you take 63,400. Our bank is always going to be the unknown if we are handling the cash flow statement, because we want the actual cash which was paid through the bank for various items. So bank is always X, right? So is equals to our CD. That CD balance will then be extracted from the trial balance, accrued expenses, and we have 14,100 is equals to 14,100. So we need to rearrange here. It will be easier if we take X to the other side. So if we rearrange, it is 9,300 plus 63,400, and this one will change when you cross the equal sign to be minus 14,100, which is equals to X. If we put that to our calculators, the final amount, it is 58,600. Because this one is straightforward, it is interest paid, we know this one becomes an outflow. On dividends, the key formula here, it is interim. On dividends paid, the formula, it is BD plus interim. So the easy mark to extract here is the BD, because it's always given. So if you look here, shareholders for dividends from last year, 420,000. That is our 1 mark already, and we are going to get what? The method mark as well, because we have already picked up one correct line item. If they are going to apply the method mark, we have something correct already. Now for the interim dividends, we need to go and check the information. Right, so here we are told that the total number of shares in issue at the end of the year is 4,600,000 shares. No shares were repurchased during the year. Okay, and interim dividend of 8 cents per share was declared and paid on 31 August 2024. A final dividend was declared at the end of the year. Alright, so there is no movement in the share asset register. This is going to be very simple. So one should say 4,600,000 multiplied by 0.08. We change cents into rand form. That will give us 368,000. This amount is for interim dividends. It's coming from this statement right here, where 8 cents per share was declared paid in August. So 420,000 plus 368,000 will give us the final amount of 788,000. And again, this is for dividend, for this paid. The moment you see the word paid, it means you are dealing with cash outflow. Alright, that one sorted. We are moving on to tax paid. On tax paid, the formula again, it is BD plus current minus bank is equals to CD. And the formula works with liabilities. If it happens that you have an asset, then you must use the opposite sign. Let us check SARS income checks opening balance. So SARS income checks, we have this amount here on liabilities. So this is a credit balance. We put it through because that's a liability. Also have SARS income checks here, which means this one is a debit balance and it's under what? Assets. So 15,900 is our opening balance. We check that. Then we should check if this amount is not a liability. We must change the sign, and for sure it's not a liability because it is listed on current assets here. So if that amount is appearing on assets, we should then use a negative to show that it is an asset. Plus current. On current, we are referring to the income statement. Alright, if we go back, remember we calculated net profit before tax and we have profit after tax. So the difference between the two will give us income tax. So if we quickly do the logic that we need here, let's check our wrong answer for income tax. Alright, net profit before tax, it is 46 million rand, the one that we have posted not so long. So if you check 46 million rand, you subtract the amount which was given right here as profit after tax, 32,200,000 rand. Alright, if we put these two into application, we'll get current amount is 13,800,000. So the word current suggests that you must go back to the income statement. The BD and the CD represent the balance sheet. Your bank is always your balancing figure, meaning it's unknown and it is what we are calculating. The cash which was paid towards tax is equals to our CD here for SARS income tax. It is a liability 21,400. So we put 21,400 here. Let us rearrange. X must go to the other side so that X can become positive. So it's negative 15.9 plus 13,800,000. Then X will shift while the 21,400 is coming this side. That will be negative 21,400. Maybe the emphasis on this balance and this balance. When you have an asset, you use a negative. When you have a liability, you use a positive. If you rearrange all this, that will give us our X amount. And in this case, we have paid 13,762,700. And it is a cash outflow because we are paying. Alright, there you have it. Those are the entries that we have on operating activities. So the first thing that you're supposed to do is to identify the line items that are needed, your interest paid, dividends paid, and tax paid. From that stop, you then need your formula. Some would use the T account, some would use the notes. I prefer the formula because it's linear, so you can easily show your answers in the given answer book at any given point. If you use the T account, you still get the same answer. If you use the notes, you still get the same answer. Then if you apply your formula, make sure that you understand the BD figures are coming from the balance sheet, and then your current figures are coming from the income statement.